Hello and welcome to another update video about gold. A lot of you have asked for another gold update today, and I understand the gold market is at the moment very, very interesting. Much cleaner pattern than silver, in my opinion. Much cleaner pattern, much more, much easier to analyze as well. Much more reliable than silver as well. The silver chart is a little bit difficult at the moment, as you might know. As I mentioned, it's just not very reliable. The patterns aren't very clean at the moment. Gold, even though it's a diagonal pattern to the upside, it's really following it really nicely. And we're forming higher highs, higher lows in a very nice and solid uptrend. And at the moment, the idea is, that this year, the price could have started that fourth wave pullback. Just checking, do I need to adjust the support area a little bit? No. So the support area is still the same as yesterday. And it is prepared for this wave 4 pullback. There are two scenarios I see. So either we are in this micro fourth wave, so the smaller degree fourth wave. However, if there is a break below the upper support area, which is located between 2,620 and 2,712, then I will have to assume we are in the larger degree fourth wave already. I already prepared the support area for this scenario for you. What we can do, just want to shift it to the right to make it clear that first there's this support area and then that one. And again, the lower one is between 2,516 and 2,622. So there's an overlap, they sort of just morph into another, from one to another. Depends on which level breaks, right? It's the 78.6 retracement of the upper support area that is really relevant, and that helps us distinguish between a pullback in a smaller degree fourth wave and a larger degree fourth wave. But both are bullish still. Below 2,516, I think we have to make a larger adjustment to the chart. But for now, I assume that a pullback has started. Looks a bit like the internal fourth wave. Let's go to the 1 hour chart and let's put some micro counts on here. The micro structure, for the fourth wave, it would be an ABC structure, right? So the idea would be A wave, B wave, C wave. That would be the idea in this internal fourth wave pullback. The A wave could be unfolding right now. Here, it looks a bit like a 3-wave move down at the moment. An A wave can be a 5-wave move, which would be more clearly bearish, short-term bearish, yeah. It just means that, if this stays a 3-wave move, technically the door is open for higher or a very aggressive B wave. If that A wave forms in 5 waves, which would mean one more low for that is required, then the B wave is often not that aggressive, and we should really get another low in wave C of 4. Yeah, that's just more so the case if the wave A is a 5-wave move. So I'm not saying it will be a 5-wave move, it's just watching for it, and this is definitely how it could be. Definitely a signal if we get 5 waves down that the B wave should be just really corrective, which means a 3-wave move that should stay below the October high, and then we get a C wave move down. For now, I think I'm at least watching for a B wave bounce to start here. Maybe we get one more low in A before the B wave starts, and then what I will do, I will take out here this target area that was useful. What we now do, we add the standard resistance area to the chart for a B wave, just so that we have those levels if we need them. And I typically add the 88.7 fib level as well. Sometimes these B waves are a little bit more aggressive. So bear in mind, B waves can overshoot and so on, but that's not necessarily anything you would normally expect. We have to prepare for it, but can't predict it. So standard resistance is between 2,771 and 2,795. So it's either one more low in A or the A wave bottomed, but at least the B wave should be starting from here or after one more low. And then I'm watching for one more low in wave C. Then we have a nice ABC structure in wave 4 before we get one more high in 5, before we get the larger fourth wave, before we get the larger fifth wave. That wave count has been followed really, really nicely. At some point, support will clearly break, but as long as we are printing higher highs and higher lows, and as long as it's quite easy to stay in the trend, and it is in my opinion at the moment, then it makes sense to do so. So that's the update about gold. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, feel free to check out the Stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye bye.